Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, the pace of job creation surged last month according to recently released data. Is this a harbinger of good economic things to come? I don't know. We'll have to check in with our panel to see. And our panel this week includes Jared Levy, stock strategist Brian Bolin, and market technician Kevin Matris. Well, I'll tell you, Jared, you're saying, if I'm correct in understanding what you're saying here, is that you don't think this jobs data that came out last week is all that positive. Why not?
Well, there's a couple different ways to look at it. Part of the problem I have, I guess, is the quality of the data, right? You know, the analogy is it's pre-Christopher Columbus, and everybody thinks the world is flat, and that's the way they're looking at the world. The jobs data was actually, if you break it down, I spent all weekend doing this, it was negative. We actually gave back 1.95 million people left the workforce over the past year, and we added 1.47 million jobs. Last week, when we got our number, 69,000 jobs is the actual real number that was added. We lost 1.25 million people out of the labor force. But again, the top line, the headline that everybody sees, the 243,000 was added, people are buying into it. And I guess if the market is buying into it, you got to believe it for now. The question is it for real, and is it sustainable? And next month, when they really compare the new data, because in January they started a whole new data set. Will that data be for real, and will the job growth continue? Well, I don't think it will.
And that remains the question, but surveys that I'm seeing in households are saying more people are actually saying that they're finding jobs, and of course Kevin Matris says that the facts are in regardless of the numbers. Numbers don't mean anything, he says. What are the facts?
The facts are in. All of these numbers were real. They weren't fake or made up. There was 257,000 new private sector jobs. This was the 16th month in a row of positive jobs creation. This was the 19th month out of 23 months where you saw positive jobs creation. And yeah, it is true the government always makes adjustments to their numbers. But if you were to take a look at, all of the numbers that the government has put out in the past, you can put an asterisk pretty much by everything. These were real numbers. This shows the economy is growing. This was a fantastic report. There is no way you can put a negative spin on it. There's no way.
I've got no problem, Brian. Hold on 1 second. I've got no problem with dealing with bad data every single month. I know the data's skewed. I know
that's
it's a
mess. Benchmark.
Yeah, it's a benchmark, right?
That's the benchmark.
But last month, they made significant changes in the way it's computed, and they also started using new census data, and that's my biggest concern. I agree with you. The other thing I saw that was a problem is that personal spending's been dropping like a rocket. People are so confident. Why aren't they spending money?
Brian has,
go ahead.
Brian has reservations about this
while
data.
While he's thinking of his answer, let me just say, the construction numbers are fantastic. You can see this in construction spending. What's interesting is that construction and manufacturing were all but absent in the first part of the economic recovery. Now, construction and manufacturing are one of the biggest contributors. This is going to usher in a whole new leg of economic growth, and it's great to see.
All right, Brian, I want to get Brian.
I think the real idea here is that these numbers are just like clouds in the sky.
Right.
And there's certain times when you can look up at a cloud and you can see a squirrel jumping over a building.
Look, it's a duck.
There's times where you can see, a cup and handle chart formation. You see into these things what you want to see into them, and how deep are you willing to go to prove your point that maybe it's wrong, maybe it's negative, or that it's positive. You're just going to do it whatever you feel is best.
Let me ask you something. If it's so positive going forward-looking, Kevin, then why is Mr. Bernanke still in this crisis groove that he's in?
He's not. He's. I mean, if you read his.
Oh, he is.
No,
he's
check it out.
I disagree with you.
He is not. He's not in. Well, sure. First off, all of his comments are measured. But if you read between the lines, he sees growth, albeit slower than what he would like to see. But it's real growth. He's going to keep interest rates low for the foreseeable future. This is going to support the stock market and the economy. He's cautioning Congress about cutting the deficit.
He challenged Congress. I mean, that was unprecedented for him to stand up there and challenge Congress and say, "Hey, listen, if you guys can't get your stuff straight, we run the risk of really running this country into major, major disaster."
Right, and he was right.
I agree.
He's way smarter than all of the intellect of the Congress combined. But he still sees growth.
The real problem with Bernanke is that he has painted himself into a corner already, that interest rates are not going to be moving for 2 years. So his greatest tool in his bag is now on the shelf. What's he going to do? Is he really going to have a QE3, or are we really that bad? Because if you tell me that QE3 is coming, I say things are worse right now than than we perceive them to be.
Whether we see QE3, that remains to be seen. We're probably going to find out in March. But interest rates staying low for a protracted period of time is the greatest thing that could possibly happen for the economy, and I think he is making all of the right moves.
Jared, what do you think about those remarks last week?
Well, I think what Kevin's saying is correct. Low interest rates are good for now. We need them. I mean, we need cheap money. That's the only way we're going to sort of solve this. But the issues I see is with the consumer, with the real consumer's health, right? Housing is the true issue. Kevin believes that housing is bottomed. I think it's trailing along the bottom, but why aren't people buying? Interest rates are at all-time lows. Houses are at all-time lows relative, right? Why are the consumers not spending the money? And if they don't spend the money, if they don't develop that confidence, and they're still lacking right now, if you look at the confidence numbers, I just don't see us propelling forward. And by the way, I also saw, listened to several conference calls, and a lot of the manufacturers talked about the strength in agriculture. They talked about the strength there, but they still lacked conviction in looking forward for construction. They don't see the strength of construction coming.
So bottom line it for me, going forward real quick.
First off, construction was up 1.5% in the most recent report. The housing market has stabilized. It is on the move slowly, but slow is good enough, as long as it's not going down, which it seems to not be.
So you're seeing slow growth going forward? Slow growth?
I see a pullback and slow growth, especially in housing.
Well, wait a minute, you can't have it two ways.
Well, I see a pullback in the market, and in housing,
market,
I think it's going to be, there's going to be a 5% drop still on prices yet to come.
Okay, slow growth going forward?
I'm in Brian's camp. Pull
Give
back
me the
5%.
last word. I say we go to 1,400 before we see a meaningful correction. This is on tape.
I say
stocks
trade.
We will check this
All
carefully.
right. Speaking of stocks, we have top picks coming up.